Okay. Well, I think we'll get started. Thank you all
Yeah.
for joining us today. Obviously, we have a very special guest with us, Nick Katko, who's the leading expert in in lean accounting. He's also an author of multiple books, Practicing Lean Accounting and the Lean CFO. He has decades of experience with integrating the lean principles into financial practices, and Nick offers us some valuable insights on how to transform the lean principles into the financial management side of things. So, thank you, Nick, for joining us today.
Thanks, Dave. Glad to be here. Nice to meet
Yeah,
everybody.
yeah. So, we'll kick things off. You have two recent books that you have
Mhm.
out, Lean Accountant and the Lean CFO. So, what motivated you to write these and why?
Well, I wrote the first edition of the Lean CFO back in 2013. It came out. And Practicing Lean Accounting came out 2021. I call that my pandemic book because everything shut down. It's like, okay, what am I going to do? And I teamed up with a friend, Mike DeLuca, and we wrote Practicing Lean Accounting. Um, that focuses more on the application of lean practices in the accounting function, how to improve accounts payable, how to, reduce month-end close and eliminate waste, things like that. And then after that, while I was writing that book, I looked back at the first edition of the Lean CFO and, sort of said, well, okay, I wrote that, 10 years ago. I think about it a little bit differently. And so it sort of spurred me on. I was going to write a second edition and add like two or three chapters. And I basically rewrote like the book. Now, the Lean CFO focuses more on the management accounting side of an accounting function. And I don't know if any of you are familiar with accounting, but you have financial accounting, the debits, the credits, the transactions, pay the bills, pay the employees, produce the financial statements. The management accounting side is what is the information that's used inside the business to manage and run the business? And that's what the Lean CFO focuses on because when you commit to becoming a lean company, the necessary the required information to run the business changes. What's needed by people and managers changes. And that's what the Lean CFO is about, is what is that set of information and how is it used?
Great,
Yeah.
great. So you came out with the second edition of Lean CFO. Can you tell us what's the difference between the first and the second edition?
Yeah. The first edition, I would say it was manufacturing centric because and one reason I sort of rewrote the whole book was to make it less manufacturing centric. And, how can it appeal to someone in service, someone in non-manufacturing, and even things like healthcare? Um, that's the main reason for the second edition. And also it in, it incorporated how to integrate. So you have the numbers of in that are being produced, but how are the numbers used? How do you use the right numbers in daily lean management? How do you use the numbers in managing and measuring continuous improvement events, things like that?
Okay.
Yeah.
So what would be the primary differences between the practicing lean accountant and the lean CFO?
Yeah. There's a there's some overlap in practicing lean accounting with the lean CFO in terms of analysis. Um, but the practicing lean accounting is really directed at accounting professionals. And how do you how do you sort of develop a lean transformation inside an accounting function? One reason is one reason this is somewhat difficult is the way accountants think. Now, I'm a practicing certified public accountant. I used to be a CFO. I worked in public accounting many, many years ago. And we are trained to think a certain way. And it's basically financial accounting. How do you run an accounting department to, you know, produce to process the transactions, to close the books, to have, how do financial statements that comply with all the accounting regulations. And so it's very technical. And, one example is accountants, for example, getting the financial statements out, you go through, if you're having a problem with a number, you figure it out and you fix the number to get the financials out on time. You don't usually think about what's the root cause of that problem, when and where did the number, where did the problem occur in the process. And so it's getting accountants to think about the value that they um, give to their customers, which is both internal users and external users. I mean, obviously, we think about, you know, quality financial statements, but accountants don't always think about internal users. Understanding waste, okay? Accountants sort of live with waste in processes. And like I said, we're trained to fix things. We're not necessarily trained to sort of follow PDCA and try to solve the problem.
Right.
And so that's what practicing lean accounting really focuses on.
So you've mentioned accountants and CFOs. Um, is there any other particular audience you think would benefit from reading these books and maybe more than just manufacturing
Yeah,
industries and
yeah. Well, the lean CFO is really targeted to any leader in a lean company, and not necessarily just manufacturing. Because whether you're a smaller company and you own a business or a larger company, and you have to understand, or sorry, it's important to understand how lean thinking changes the information that people need and want. Like, the best example is, and I still encounter this at some companies, um, where the leadership of the company says every continuous improvement event must show a cost savings. When if you're in a lean, if you have lean experience, especially on in continuous improvement, you know that's not true. And so you have that thinking, and that's just an example of, what how do we measure a continuous improvement event? Because the cost savings, if you just follow cost savings, it's artificial, it's not real. It won't show up. And then, if you get into a larger company, you get these people who are saying, well, you've been doing all these improvement events for 2 years and I don't see my costs going down.
Yep.
And it's like, what good is this? So, that's why the book is really geared to at a wider audience. And really, the whole idea is to try to bring three groups of people together: senior leaders or business owners, the leaders of accounting and operations. If those three groups understand how the information needs to change, things work a lot. It works. It's when you get like one of those three groups who basically holds out and says, "No, I want things the way they used to be or the way they've always been."
Yeah, I think the majority of us on this call would understand I'm not seeing the changes on the bottom line here, what's going on.
Yeah, and part of it is, accounting professionals need to understand also how lean works. And you don't have to be an expert. You could be a CFO or a controller or even like a cost accountant or an analyst. You don't have to be an expert in lean, but you need to understand how it works. And
Right.
that's what happened to me way back when in the 1990s when I was working for a manufacturing company, and we were a traditional manufacturer. I was there 10 years. We were a traditional manufacturer for 5. We brought in some people with lean experience, totally transformed the company. And what I learned, I saw, because it was a family-owned business, I saw, oh, we've done all these changes. We've made all these improvements, and look at the transformation of our financial statements. That made me a believer in lean thinking. And after that, it was like, okay, fine. You know, um, I understand the weaknesses of looking at lean through what I would call the traditional accounting lens, you know.
Absolutely.
Yeah,
So let's focus on the practicing lean account book.
sure,
Can you briefly explain the layout of that book and what readers can expect?
sure. Yeah. Can I go get a copy of it?
Sure.
Okay, hold on. I really wanted to. I don't think I it's the way that the book is set up is that there are 4 core practices that it's understanding customer value, and all of these are each chapters. Understanding customer value from the account for in terms of accounting's customers, both internal and external. Understand waste. And the book even goes through examples, a lot of examples of waste in accounting, not like waste in manufacturing. How do you measure lean measurements? And then PDCA, how do you do problem solving and improvement? So those are the 4 like core chapters. And then there's a chapter about how do you use those 4 core practices to improve accounting processes. And we go through accounts payable, accounts receivable, month-end close. How do you build a quality system in accounting? And then we talk about financial management, which is that financial management piece is the overlap between the Lean CFO is, the basic financial management practices. If you're looking backward, analyzing like operational results, how do you do it? And then how do you use the right numbers to drive decision making in a lean company? And then the last chapter is all about financial leadership. What should what should financial leadership look like in a lean company? So that's the basic outline of the book.
Nice. So obviously, as lean practitioners, we say lean can be implemented in basically any function. But is there anything unique about implement lean in the accountant function itself?
Yeah, I think so. Because um, first of all, like I said, accountants by their nature, we're busy. We get our work done. We're deadline focused. Okay. And like I said, because of the deadlines, what I said earlier, there's a lot of fixing. So we may have problems in accounts payable with invoices, but okay, so there's an error on this invoice. So I'll send it to purchasing and then I'll wait for purchasing to send it back to me. And it might be that might happen all the time with a particular vendor. And so you have to make the accounting people aware of what waste is. Okay. They know how to get the work done. I mean, I know anybody in accounts payable knows how to process the invoice the right way. And you know what? If the information is correct, it usually doesn't take long. But what do you do when the information is missing or incorrect? Same thing on the receivable side. So you really can't. What I found is putting in measurements also is important, and focusing more, like especially on the transaction processing side, focusing on basic daily lean management to reveal the problems and issues that you know you know for example, if I'm working with an accounting team, I know that once the issues are revealed, problems, then you can start talking about improvement. And so I don't, I rarely focus on like doing a process map first because they don't have the data and they go, why are we doing this? We know how to, we know how to process things.
Yeah.
But if you turn lean thinking into moving numbers, now accountants know how to move numbers. They know what a good number is. They know what a bad number is. So that's what I do is I turn it into numbers and measurements and say, like, one example, this company I work with, and I've been working with them for a few years, met one time with the accounting team. And it was sort of just brainstorming. And so I said, what kind of problems do you have? And somebody spoke up, said, oh, we have lots of problems in accounts payable. Really? What? Oh, there's always mistakes. Do you know how many? No. I said, why don't you measure them for a month? How many invoices do you get in that have a defect, which means you can't process it for some reason? And they measure, and I said, I'll be back in a month and we'll go over the numbers. And they had a defect rate of like over between 40 and 50%. And they also figured, I also said, understand the reason why, not just defect. Then it was like, oh, okay, now how can we solve these problems? Why is there no purchase order on invoice? So it's getting accountants like to think like that, you know.
Um,
Now, and the other part about accounting is that a lot of the problems that accounting discovers occur upstream outside of accounting. So you have to have good relationships with like I don't I when I talk to accountants, I don't just talk about accounts payable. I start talking about procure to pay. And I don't just talk about accounts receivable, and I'll say order to cash, you know. So there's lots of they have to start thinking broader process, but they also can't act like policemen. You have to bring the people in and talk about how do we improve this. So that's really how I get started with it. And once they get the hang of it and they understand how to measure, they pretty much can handle things.
yeah, the one thing I've noticed is when we get talking about um, the financial results from the prior month. The one thing they always say is that, oh, we gotta look into what the root cause is. And I said, it's too late,
Yeah.
right? That's old news, right? So like, why are we focusing on something that's old news? So
Yeah.
maybe getting a little bit more. I mean, if you work with your accounting team, might be able to get a little bit more insights before the month closes as to perhaps changes that are happening within the operation.
Yeah. And that's the idea behind the numbers in the Lean CFO is, what performance measurements do we need to look at on a daily basis and on a weekly basis to understand operations that become more forward-looking, meaning that if the numbers are hitting their target, the financials probably will work out. I mean, I'm not exactly predicting the numbers, but for example, if your lead times are hitting the target, and if your on-time delivery is hitting the target, your sales number is probably going to work out. Now there, manufacturing, maybe there's a product mix difference, but okay, but if your on-time delivery is poor and or your lead times are extended out, well, you can expect that you may not hit your sales number, for example.
Right.
You know, Likewise, if your productivity is hitting its target, your expenses are probably going to be okay for the month. So it's making those connections, because what I and lean people understand this. So what I try to stress to senior leaders, owners, and financial people is on, your operating performance is going to drive your financial performance. It doesn't work the other way around.
I like that point. Do you think that the accounting profession has truly embraced the lean principles as much as manufacturing? Why do you think that? Why or why not?
Well, first of all, in America, you have the American Institute of CPAs. You have, and, they focus on professional education and development. You have the accounting schools and or the universities that teach accounting. They focus on the financial accounting piece. They focus on developing accountants for public accounting and to become CPAs. Yeah, you learn a little bit about managerial accounting, but you take financial accounting, you take tax, things like that. And there's AICPA courses on lean accounting, but a lot of it is like, how do you automate stuff? You know, and it's always about big data and automation, um, not necessarily focusing on how to improve the process. So it's sort of like, it's almost like they try to take these leaps, like, oh, automate accounts payable, and all your errors go away. I mean, even one, let me just give you one example of a company I'm working with. What did they do? They had um, the approval of invoices, the idea of, okay, I'm going to email the invoice to you, Dave, and you approve it and send it back to me. Well, okay, that stuff got lost. So they bought a software package of routing the invoices, you know. Well, that broke too.
Yeah.
You know, it works better, but there's still glitches in it, and it, accountants think about software and systems. That's what they like. Okay. I need a new accounting package. I need to use big data. I need to, now it's like, oh, artificial intelligence, and there's also that, the other big thing in the accounting profession is blockchain, where you're never going to have to send an invoice again. And, you're my supplier and we have something set up, and the invoice gets coded properly every time. Okay.
Yeah.
Come on. That's like, putting robots in every factory and saying we don't need people to think.
Right. Exactly. Um, so how does one get started in lean accounting? And do you have any success stories that you can share with us?
Oh, yeah. Well, you know, first thing is, like I said earlier, there's like three groups: senior leaders or owners, accounting leadership, operational leadership. Um, they need to understand, and I'm talking more about the managerial side right now. Um, if they're in a lean company, and a lot of times, I'll get phone calls from the continuous improvement people and saying like, oh, we're having problems. We can't, we're having problems measuring it. Accounting doesn't understand. It's not like they're resisting. It's just like, they really don't understand. So it's recognizing that, there's a problem and there's an opportunity. And if you get those three groups together and they acknowledge it, then you can say, okay, now let's start looking at what are our real problems when it comes to the numbers we're using inside the business. And then, much like lean, you pilot, okay? Because there's always going to be people who say, well, what are these numbers? How do I use these numbers? Producing the numbers is easy. Creating the measurements is easy. It's getting people who do any kind of analysis and decision making, not just in finance and accounting, but throughout the company, to use the new numbers. Because they've developed thinking habits, especially, for example, if you've been in, you know, manufacturing for 10 years, and you're used to you looking at certain numbers, you sort of develop these thinking habits. So you have to produce the numbers and demonstrate how they're being used. What I like to say is, you're making the same decisions, but you're using different numbers. Now, the outcome of the decision may still be the same, but just using the numbers makes you think differently. And that's really the key. Inside accounting, improving accounting processes, it's really getting them to realize that they can get better. It can improve. That's why it's sort of like, what's your pain points? Inside accounting, you almost have to make it personal. You work a lot of, it's sort of like the traditional accountant, comes in early, or the transaction processor comes in early, you know, works through lunch and or stays late to get all the transactions processed on time. They think that's normal. So you sort of in inside accounting, you sort of have to make it personal. You know, what bugs you? What problems do you see? And even just let them articulate it. And then, like I said, get them learn how to think things through with PDCA rather than just putting patches and band-aids on things.
Exactly.
Yeah.
All right. Let's move over to the Lean CFO. Like Tamara, I got my copy here. I
Yeah, thanks.
haven't had a chance to tap into it yet with the holidays, but will be on my list of readings. So,
Sure.
could you perhaps take us through the layout of that and how's it designed to guide the readers?
Yeah. So actually, in the first edition of the Lean CFO, I put like leadership at the end. And I said, no, leadership at the beginning.
Mm,
Okay. How you as the CFO, you know, how do you have to think? What behaviors do you need to model? I put that at the beginning. And then I talk about, a lean performance measurement system. What are the right measures that need to be in place? I mean, and this isn't anything that's within, it's a lot of lean companies and a lot of lean people know this. But what are the measures and why do you have to have daily measures, weekly measures, and monthly measures? Because again, finance thinks on the monthly cycle. So it's how do you put that measurement system? What are the measures? How do you develop it? I have something that I use with companies called the linkage chart process, which is bringing a cross-functional team together and basically mapping out the measures like for the company for one value stream and for the cells in a value stream, monthly, weekly, daily. So I explain that process. Then we talk about, then I talk about measuring capacity because most continuous improvement events, you eliminate waste, you create capacity or time. How do you measure it? I mean, yeah, there's, ERP systems that measure capacity by number of man hours, but that's not it. So I explain how do you go about calculating and measuring capacity. Then I talk about the value stream income statement. Okay. So this is an internal management report because when accountants hear income statement, they think something that's going out to the external users. But the value stream income statement is such that is set up to show the actual sales and the actual costs of any value stream in the company. What I like to tell financial people is that your profit center, your value streams are your profit centers. So we want to look at it like that. And so it's, the performance measurements, the capacity, the value stream income statement makes up what we call the value stream box score. So those are the three components. And how do you, what are the actual costs of a value stream? How do you identify them? That's what we talk about. Then it's about how do you use the box score to make decisions and different types of decisions, mainly through examples. I also talk about something called value stream management, which is how do you take these numbers and incorporate them into lean practices. I mentioned this earlier, daily lean management, value stream, managing the value stream, managing continuous improvement, strategy deployment and Hoshin. How do you take the pieces and put them in place so you get this integrated holistic system? And then finally, I wrap things up a few chapters on standard costing. That's the manufacturing piece. Um, because if any of you work in manufacturing, you know that standard costing is pretty much used in most companies. The big problem is that standard costing doesn't really work well in a lean company in terms of using it for analysis and decision making. And so I have three short chapters which basically say, how do you simplify standard costing and eventually eliminate it? And you know, the, rather than talking about it throughout the whole book, which is what the first um, edition does, because from and this is in manufacturing, this is the big hang up. Accounting needs standard costing to value inventory. Standard costing is also integrated into the ERP system. So all the production transactions that get reported are part of standard costing system. So it's like it's a heavily woven into the fabric of the company, and it's hard to take it apart. And so, but there are ways to do it. It's not like the first thing you do, but you can create a plan. And I mean, I was able to quote unquote turn standard costing off as a CFO. I've worked with other companies that have done it. So that's the last three chapters of the book.
I'll definitely be hitting those last three chapters because it's often a fight about standard cost and what's actually happening on the shop floor, right? Like it doesn't give you the true picture, and people start talking about, well, we're not meeting standards and all that, but it's how the standards were set up that is so critical, and I think people often miss adding every every aspect of the process in that standard cost. So they might measure machine cycle time and say, here's our standard for this process, but they're missing the he's got to go get a box every 10 minutes so where does that go? It goes to burden. Oh, well, that doesn't
Yeah,
make sense, right? So
yeah. And it's been around. Every ERP system has it. And they tell you, oh yeah, you can calculate anything. And it's like you get these people who want to, go down to the fourth decimal point of things in terms of how long does something take, what are the rates, things like that. And it can create a lot of dysfunctional behavior in a company. And so really, the thing about what I said about, getting started. So the idea of creating in certain companies where standard costing is used a lot, it's I usually try not to say standard costing is bad, you got to stop using it because that sort of turns everybody off. And so what you do is you focus on creating some box scores and get people to use the box score. Then it's easier to have the discussion about, okay, so if you're using the box score, do you really need this other information? Now, how can we basically make some of this information go away, but still use standard costing to value inventory? So you have standard costing over here, used in accounting to value inventory. End of discussion on standard costing. Then you have the value stream box scores here, which are used in analysis and decision making. So it's about getting people to understand to separate this stuff.
Nice. So you talk about the lean management accounting system.
Mhm.
Why is that important?
Um, I mentioned financial accounting is basically governed by the accounting rules. How do generally accepted accounting principles, internet, IFRS, whatever you want to call them, you know, management accounting in a company is not governed like that. There's no out. Every company creates their own management accounting system to use. And whatever works, works for the company. And so if you're a non-lean company, you've created a management accounting system which creates what I would say relevant and reliable information for the way you operate. When you commit to lean thinking, everything changes. The way you think, the way you produce, the way you deliver services, waste, all that, And so you have to be able to measure. And so the management accounting system needs to adapt. So the information needs to change so that it becomes relevant and reliable in your lean company.
That
That's
makes
why it's
sense.
important.
That makes sense.
Yeah. And, you have customers. The management accounting system has customers, everybody inside the business who uses the information. So it's about creating value for customers. This is the way I try to explain it. You wouldn't think if you were a manufacturing company, you're creating a product and throwing it out there and wondering why your customers are not using it. Whereas, and I've heard this many times where you have from lean operational people where accounting is still disconnected and they say, oh, yeah, accounting sends us this variance report every month and we just ignore it.
Right.
They have their own little system, and accounting never says why are you ignoring it either.
Exactly.
So,
So,
you know, you want that management accounting system. There's different ways to explain it. There's waste in the system. You're producing poor quality information that nobody's using or nobody wants to use. You're maintaining a complex standard costing system that nobody really uses except you. So that's why it's important to understand what a lean management accounting system is.
great. So, how would a company get started with the Lean CFO practices? Who should be involved, and generally, how long does it take to implement these
Yeah.
practices?
Well, I mentioned earlier the three important groups, senior leadership, accounting leadership, operational leadership. They need to get on board. You know, they need to, the idea of training or getting people to you want that group to think the same way about what lean management accounting is and what it isn't. So you sort of get the basics down. Then jump into a pilot to show how it can be used in the company. Develop numbers that are real in your company. Develop a real box score. How long does it take to It doesn't take long to build a box score. I mean, the way I work with companies is we focus on each component of the box score. I've worked in some companies where we do it in a week. Other times we take a little bit longer, work on performance measurements, then come back a few weeks later and work on the capacity. But you can get a pilot built rather quickly. The thing about it is you don't want to just you have to start thinking differently about what the numbers need to be. It's not like, oh, we have all the numbers. Really what you have is you might have some measurements and numbers that work well. You have some that don't work well, and you're missing others. And that's really the pilot process is and through the pilot, you develop standard work. How do we calculate a value stream income statement? So you do the pilot, you create the standard work. Then if you want to move into subsequent value streams, you have the standard work down. And in the pilot, you take a team and you train, they get experience in this. So it's sort of like the train the trainer approach. But that's how you get started. Um, like I said, I worked with a company in Denver in October, and we did it in 4 days. They were committed to it. Again, this is you gotta if you want to do it that fast, you got to approach it like a Kaizen event, meaning everybody clears their schedule, you're involved, you have an agenda, you work through the agenda.
Makes sense.
Yeah.
Impressive.
Makes sense. So these are great insights, Nick. And I'm just curious the way the world's changing with the digital age and everything. Um, what's your vision for the future of these principles in accounting and financial management?
Yeah. I think, when it comes to the lean management accounting system, um, and I've seen a couple companies do this, where you go through the practice of creating value stream income statements, calculating capacity, and calculating the performance measurements. And then you use your business intelligence tools to automate, you know, because once you go through the calculations and you know where the data is, then any person who understands the software and the business intelligence, you just grab the numbers. And I think that's the future of what I would call the box scores. Um, the lean, putting lean thinking into accounting and finance processes. I don't think the future, you know, it's just continue to do the things, continue to follow the standard lean practices, daily lean management, following PDCA, following PDCA and doing problem solving, not jumping to conclusions, not trying to automate out, not try to put automation in thinking it's going to eliminate your problems when it's just going to automate your problems.
Yeah.
And again, like people always talk about people solve problems, people think. Artificial intelligence can't think when it comes to, for example, errors in accounts payable or how do we reduce how much time we spend on month-end close. That's people thinking.
I completely 100% agree with that thought.
Yeah.
Okay. We're getting close to time here. We could maybe open up for
Yeah,
a couple questions if there's
sure.
anything from our attendees.
Yeah, I have a point about I'm working with a company here in Italy, which is they don't have anything like oh my God, in Italian. Now I need to translate this term. Anyway, they don't have part numbers, they don't have anything at the moment, and they want to build a system, and they are in the direction to implement standard costs, and I should avoid they do that that path, right? They're going
Yeah.
that path. So this, you're suggesting is to start with actual cost model, or what is the model?
Well,
Or
but by the way, where are you located in Italy? Curious.
north of it, north of Milan,
Okay. Um, I guess the first question I would ask is why do they want to put standard costing in place?
because they are growing, so they grow, and they now need to value their inventory. They need
Hmm.
to
Okay.
report into so they
Well,
reach a critical mass. Now they need
okay.
to do this.
Right. Well, there are, okay, standard costing is a method to value inventory,
Right.
but standard costing is not in the rules.
Sorry,
If you read the accounting regulations about
right.
inventory valuation, it never says you must use standard costing.
Sure. No, no. You need to have a value. So that's what they're
Yeah.
looking for.
And so, as you know, I probably would focus on how showing them different ways to value the inventory without standard costing and also explain the complexity of what they're getting into because yeah, it values inventory, it's sort of automated, but then you
Hmm.
have to report the transactions, you have to set the standards, you're going to
Correct.
get all the variances on your financial statements that you have to explain. Do you really want to go through that? You know,
No.
And rolling standards every year, and
oh yeah.
oh,
No, exactly. So the alternative is actual cost, or is something like
Well, yeah, well, the financial statements are at actual cost. When you're valuing inventory, it's about the, and I don't know, I'm going to talk some financial accounting. What the accounting regulations say is you have to take a portion of your production costs
correct? Yeah,
and put them on the balance sheet to value inventory. Because inventory should be made up of materials and production labor and overhead.
correct.
So what you're doing is you're reducing expenses, putting them on the balance sheet, and then the same thing happens when you're showing cost of goods sold. You got to show the material and some of the production costs. How can you do that in the leanest way possible? You know, it can be done by a simple calculation on an Excel spreadsheet, and then you do a journal entry every month.
Hmm.
You don't have to create
Easy.
that system.
Yeah. No, we are working on this. So we have selected some numbers, and we are working on defining materials, labor. The discussions came up around the overhead. So how much overheads we spread, and so on. And I said this it, it's a model, so it's a mathematical model, how much
Right.
overhead you want to share on different parts, because some parts are just simply traded, so they buy and sell or resell, and
Right.
some parts they are working and transforming. So
Okay, okay. So what you can do, see, again, everybody goes down to the part number or the product.
right, correct.
You can value inventory just in total. You don't have to value every single part.
Okay,
That's when people start thinking about every product. Okay, how much labor time is in it? And okay, so then you what you do is you say, okay, if that's the labor time, here's the labor rate. And then you say, well, the overhead rate is a function of how much labor. So automatically, any product that takes longer is going to have more labor and overhead.
sure.
But that's not true. So
Yeah,
so you can just say if we look at our balance sheet, for example, and we have, you know, 500,000 euro of raw material, how much of the and how much did we sell in terms of raw material? You can figure out in a simple way how much of our manufacturing expenses do we have to put on the balance sheet. You don't have to do it product by product.
okay. Well, I know how many people is working there. I know the machines. I know the running costs. So
Yeah, but you don't even have to get into that level of detail.
right. Okay,
Yeah.
Okay.
thanks.
Okay, maybe time for one quick one.
Thank you.
Okay. You're welcome.
Okay. All right. If there's no other questions, I thank you, Nick, for your time and your valuable insights on lean accounting and its impact on the organization. For everyone that joined us, Nick's books are available at a discounted rate on Amazon, I believe, until the end of the month.
Yeah.
So I've got my copy and looking forward to diving in it, and especially on standard costs. But I'm sure there's lots of great nuggets in here. And again, thank you for your time, Nick. And if there's any additional questions from any of the members, I encourage you to message Nick within the community.
Yeah. Thanks a lot. And did you post those discounts in the community?
I believe I did, but
Okay.
I will double check that when I post the video onto the
Yeah.
classroom. So,
Thanks. I enjoyed it. And everyone have a happy new year. You have any questions, please contact me through the community.
okay. Thanks again,
Thank
Nick,
you.
and take
Really
care,
enjoyed
everyone.
it.
Bye.
Thank
Thank
you.
you.
All right. Bye bye.
Enjoy the rest of the day. Bye.
Bye bye.